Jim. Take it away.
Becky, like you said, S&P's coming in basically steady here. Empire Manufacturing comes in at 22.6. That's better than an expected 21. Not as good as last time was 25. Retail sales month over month comes in as plus 0.5. That was as expected, but last month was revised up to 1.3. Better than that already big beat we had last time. X auto is plus 0.4, a slight beat. Another big revision on the backside. X sales, auto and gas comes in plus 0.3. So that one's a little less, but also revision up to plus 1.3 last time. So the revisions are probably the bigger story in the retail sales. S&P came in, like you said, steady, mostly still steady. The 10-year was 2.84 and change. It's gone up to 2.8436. What's interesting about this is that we've already seen some decent earnings this morning in B of A. Last earnings season, every good beat was responded with bad stock market performance after that. So that's what we're looking for today, to see how we interpret this good news. So far, the stocks have been a tiniest bit buoyant on this, but nothing more than that. Back to you, Becky.
Hey, Jim, real quickly, let me just ask you, over the last couple of weeks, what's the market been watching most closely? Has it been the trade issues? Has it been the economy and earnings? Has it been what's been happening with the 10-year or what's been happening with spreads?
Well, okay, all those things are in the cocktail, but I think the thing that we don't talk about enough that I think is the overarching theme is rates that are probably rising. Now, the 10-year has stayed within a range over the last few weeks, and we've been kind of happy with that. That's why I think the stock market's going higher. But any raise in rates is treated very negatively. So I think that's the most important thing. Trade, tariff, and earnings and economic data, I think, are all tied for second.
All right, Jim, always good to see you. Thank you.
Thank you. Thank you, Becky.
For more reaction to the numbers that we just got, Steve Liesman is here as well. And Steve, digging into those retail sales numbers, anything that really jumped out?
Yeah, Jim nailed it in that the revisions are huge. Revised up 1.3% on the top line. I just want to double check. 0.8, another half a point added to May, and we hit the current number for June at 0.5%. Autos very strong. I don't know. Somebody was talking earlier this year about the demise of auto sales, and but that would be greatly exaggerated. Up 1% on the autos, furniture and home up 0.6%. Some negatives in there that look like they're kind of bounce backs from the prior month. Like you did 2.9 in apparel or clothing last month. You did -2.5 now. Not really concerned about that. General department stores are up 1.4 in May, down 1.8. So that's a kind of a wash. And again, the non-store retailers up 1.3%. What I don't know, and I need to call the census today to find out if they actually seasonally adjust for Prime Day. Because no, you could imagine.
You think it's gonna be that big? It could be.
No, it doesn't have to be that big, right? You do an extra. What was the number that Courtney was talking about?
Last year was 2.4 or 2.4 or 2.5. This year it's going to be 3.4.
3. So you add that, and then of course it becomes annualized in the GDP data. So it matters.
What I did not get out of this is this something that people wait for spending? Does this pull forward or push back any of the spending that's out there?
Good point. If you have a come down, I'm going to look at that on a monthly basis later today.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.